Hello, thank you so much for joining. We appreciate you joining so you can learn about the 11 benefits of multifamily investing for the passive investors. There's so many ways to make profit out of multifamily. And as a passive investor, it's one of the key benefits of how to reap the fruits of multifamily investing. I'm so glad you joined us so you can learn about the benefits of investing in multifamily as a passive investor. Let's get started. Okay, real estate syndication can be immensely profitable way to expand your cash flow. It is definitely one of the ultimate ways that you can generate great amount of cash flow through several sources of income. And we're going to share some of those with you tonight so you can see how it can benefit you. There's a lot of people that have become millionaires and multimillionaires through real estate as passive investors. Being a passive investor is definitely one of the key benefits that you can use and leverage to generate money on the side. Think about it. You might have a W-2, you might have a W-9, you might have other sources of income. And this is definitely one of the best ways for you to add into your way of making money. I'm so looking forward to sharing all the many unique benefits of multifamily investment with you, from passive income to tax benefit, name it all. We're looking forward to sharing with you the details. One of the biggest benefits of multifamily is consistent, steady cash flow. Think about it. You put your $50,000 into a multifamily investment. Say, for example, it's a 100-unit apartment, right, with 100 tenants in it. That's 100 sources of income. For every tenant that's paying, you're getting a cut of that. The multifamily pays the bills, they pay the lender if there's a loan on it, and whatever profit that's left on that comes to you as an investor. Typically, it comes to you. Most people will get it as on a quarterly dividend, or some people every 6 months, some people do it every monthly, depending on what structure you have for that investment. But the good thing is that you have a constant, steady cash flow. One disclaimer, like any other business, the numbers are not the same every month. There could be some month that's high, some month that's low, depending on how you structure the deal. But at least you can have a peace of mind. Whether you get money or not on a given quarter, your money's there and it's generating value, and you're basically either getting something physically or it's basically building up somewhere so that when it comes time to sell or refinance, you get it all as one lump sum. One of the key benefit is investing with a sponsor. This is very key, because if you invest with a sponsor, it will give you a chance to work with somebody who's very experienced. I think it's very important that you know who your sponsor is. By the way, we have a checklist that we'll be glad to share with you. You can go to our website and download it. And the checklist, some of the things it provides is a list of questions to ask a sponsor. Sponsor is basically the person who's going to be working to make you money, generate profit. So it's very important that you have a strong sponsor who is very experienced, who is very knowledgeable with your market, and has proven track record that they can deliver. And so you as a passive investor, you're going to be relying on the sponsor to turn your $50,000 into $150,000. So in other words, you put the money, you don't do anything else, the sponsor do all the work, and you get the benefit, you get the profit. Lower risk than other real estate investments. If you think about it, there's one fact, and this is very important fact to keep in mind. Multifamily, housing is a necessity. Housing is a necessity. It will never change. Whether the economy is good or whether the economy is bad, people must still have a place to live, a roof over their head. Which means if you think about multifamily, investing in multifamily, you're investing into something which is a life necessity. So therefore, the risk is significantly reduced compared to other real estate investments, simply because whether the economy is good or whether the economy is bad, people must still have a place to live. Very, very important. As you look to invest as a passive investor, you're going to be very limited on what you can do. So one of the things you can do, knowing that you're limited on what you can do once you invest the money, is to invest in something that's less risky, but also something that has a very good, strong sponsor with track record that can deliver on your profit. Diversification. Think about it for a second. Um, you probably have your W-2 income, right? Or you have your W-9, self-employed, other sources of income. You probably have IRA money invested. You probably have, something in the stock. This is another source of income for you to diversify into. It's very important to, diversify all your sources of income. Just don't rely on your 9 to 5 job. Just don't rely, if you're self-employed, just don't rely on your self-employment job. Get other source of income. And the best thing about multifamily passive investing is that you can keep your job. You love your job, keep doing it. But have money on the side. Have your money generate money on the side. The best money is the money that's generating you more money even when you're sleeping. And passive investing through multifamily investment is surely one of the best way to do that. And remember one thing, with multifamily, like I indicated earlier, think of 100-unit apartment and assume all units are rented. So there's like 100 tenants in it. Every one of those tenants is paying. If you have 2, 3 tenants not able to pay, 5 tenants not able to pay, 10, even 10 tenants not able to pay, you're still going to make a profit because you diversify your sources of income through several buckets. Compare that to investing, on a single family home, whereby if the tenant can't pay on a given month, then you're a luck because that's the only source of income for that investment. Think about it for a second. Capital preservation. Think about it. If you put your money in the bank today, $50,000, and then you take another $50,000, you invest it in multifamily, and assume 5 years from now, you sell that multifamily, there's a good chance that $50,000 is going to become $100,000. It doubles in its value, right? That's one of the benefits. But the one you had in the bank, there's a good chance 5 years from now, the value of that $50,000 will be less than $50,000 because of inflation. So you basically have one whereby you're losing the value of your money, one you're getting the value of your money. When you put your money in multifamily, it is there, it is growing its value. The good thing is that you now don't have to spend it, you don't have to waste it, you don't have to take it on, to buy something, go on a vacation or do other things, but it is there generating money for you so you can enjoy all the benefits. Earning preferred return is another key benefit of multifamily as a passive investors. This is just one of the options. There's several ways to earn money as a passive investor, depending on how the deal is structured. But preferred return give you a chance to be high on the capital stack, whereby once all the bills are paid, all the invoices are paid, and the lender is paid, if there's a loan on the deal, then you'll be the next in line to be paid. And usually, with the preferred return, there's some cap, that the sponsor might have, and this and that. But at the end of the day, you have a peace of mind that you are high on the capital stack, or rather on the food chain, whereby you get your cut before the sponsor get their cut, or you get your cut before even other investors get their cut, depending on how you structure the deal. Ease of scaling. Think about it. Assume you have $200,000. You take $50,000, invest in apartment in Texas, another $50,000 invest in apartment in Florida, another 50,000 invest in apartment in Georgia, another 50,000 invest in apartment in Idaho. All of a sudden, you have 4 different apartments that you invest in, which means your $200,000, instead of you just using it to buy one single family, all of a sudden you're so diversified, you invested in several different assets in several different markets, and each of those, assume each of those has 100 tenants, which means all of a sudden you have 400 tenants, that whereby each of them, as they pay their rent, you get a piece of the cut of their rent payment. That's what we call scaling up. I mean, all of a sudden, from one $200,000, all of a sudden, you have several sources of income, because multifamily, through passive investing, enables you to scale up and invest in several units easily overnight. Liquidity events, right? So that's one of the benefits. Assume you invest the same $50,000 on a deal, right? And with us, we do this all the time. We have experience doing it. And we acquire the property today, 18 months later, the sponsor do the refinance. Out of that refinance, assume you get 50% of your money from the cash out refinance, which means your $50,000, you get $25,000 back. That $25,000 back to you is non-taxable, zero tax on it. You can turn around and invest that $25,000 on another investment, which means all of a sudden you now have two investments. Investment A with that initial $50,000, and in investment B with $25,000. And this is the best part. Investment A, you still have the same ownership share, same profit share on investment A. So basically, all of a sudden, you are getting benefit from two assets. That's one of the benefit of the liquidities, right? The other one is when it comes time to sell, right? You get a piece of the pie when the property sells. It's not like the property sell and then you cut out. Of course, it's very important to know how the sponsor structure the deal, because some sponsors like to structure just a way that you don't get anything on the back end, or you get very limited thing on the back end. Actually, with the preferred return, you gotta be careful. So because some sponsor might tell you like, hey, we'll give you 10% preferred return, but you don't get anything on the back end. So make sure you look at how the deal is structured. But this is just one of the benefits you get with multifamily, is that every time there's a liquidity event, you get a cut of whatever coming out of that. And remember one thing, you can refinance as many times as you want, right? Depending how long you hold the property. And every time there's a refinance, you get money from the from the cash out refinance. Tax advantage, one of the benefits of multifamily. There's several tax benefits you can get with multifamily. You probably already know about 1031 exchange, cost cost segregation benefits. You have several things like energy, utility bills. If you're in Texas, you get Texas Public Facility Corporation, which basically enables you not to pay property tax. Of course, there's always a catch to that, but you get all these kinds of tax benefits that either you get from the federal government or the local government or the state government that are geared to help you grow. Remember the one thing, housing is a necessity. The government recognizes that housing is a necessity. They want to make housing affordable. They want to make it sustainable. So they have all the kind of tax benefit that are supposed to incentivize you to invest more in real estate so that you can help alleviate all these issues that the government trying to resolve, like affordability. Better annualized return. Annualized return in this context is different from cash flow. Cash flow is the money you get every month from the rent collection. But when you look at it, if you invest in a property and then after 5 years, the property sells, right? And so basically, say it sells at 100% profit. So you invest your initial $100,000, you invest your initial $50,000, you get $100,000 back. In that case, basically your annualized return is 20% of every year. So when you look at all the money you've been getting during the holding period, plus the profit of refinance, plus the profit from selling the property, you annualize those. Typically, when you look at multifamily, you always end up getting way better annualized return compared to other types of real estate investments. Of course, once again, it goes back to how the deal is structured. And you always want to make sure that before you invest in a deal, you have a deal whereby the sponsor things about you and puts you ahead of them in terms of profit share. So in case you want to learn more about real estate investment, learn more about how we do, we would love to talk to you, get an expert advice. We'll be glad to chat with you about anything related to passive investing. We have a checklist that I would highly recommend you download so you know some of the key things you should be asking. We have an ebook that we highly recommend you download so you can learn more. And this is just one of the things we're giving you on this webinar. So in case you want to talk, in case you want to learn more, please contact us on this using this link. Go to our website kindleproperties.com so you can click contact us. You can also email us directly, and we'll be glad to give you our advice, talk to you, share thoughts with you, ideas with you. You don't have to invest with us. You're still welcome to call us and chat with us as you try to look into multifamily investment. Thank you so much. We appreciate it and looking forward to chatting with you in the future.